Hello everybody, thank you so much for being here with me today. I really appreciate your time and your attention throughout this video. I'm Kathleen from Wanderers Wealth and I help digital nomads, location-independent entrepreneurs, online business owners with their international tax strategies. In today's video, I'll be answering a very frequently asked question, which is how much money should I be making before I start thinking about an international tax strategy? I know that a lot of people would like me to answer this question with a magical figure that they need to be reaching with their business in making their income before they're ready for an international tax strategy. However, I have to tell you straight up, it's not a black and white kind of thing. It's not a, yep, once you start hitting 6 figures to 7 figures, then you're ready for an international tax strategy. It's much more a personal decision. And in today's video, I'll be answering your question and uncovering 5 different considerations that you might want to think about it when you decide should you or should you not look into an international tax strategy for your own personal taxes and your business taxes as well. So let's look into consideration number 1. Your current income, your current savings, your current net position. So how much money have you actually got right now and how much money would you be willing to invest into an international tax strategy? That's where I would start. Usually I would recommend to have at least $3,000 for an international tax strategy. However, that's a very big generalization because the tax strategy can be anywhere from $3,000 up to $10,000, and yeah, it just goes on. If you're looking to get a second citizenship, then we're looking more into you needing to have $100,000 ready to invest. However, the international tax strategies that are on the lower spectrum, they can start from like $3,000. And that will usually involve setting up companies somewhere overseas, and company setup can be quite cheap. And once you basically receive a strategy and know which country would be best for you, then you could also go and set up the company yourself and pay yourself the registration fees, or you can go to one of my partner accountants, lawyers and offshore providers, and I can make a recommendation for you. So that would be more on the lower end, starting from $3,000 upwards to the $10,000 mark. And then there's much more higher investment costs that will come, you know, with a citizenship by investment program, residency by investment program, tax residency. Those usually are a bit more expensive. It also is very much dependent on which country you want to set up in. For example, the UAE is usually way more expensive than in some Eastern European country. So be prepared to pay more if you want to set up in a place like the UAE as opposed to somewhere in Eastern Europe. That's the first consideration that I would think about when deciding whether or not to look into an international tax strategy. Then the second consideration is also look at your business growth, or whatever stage you're currently in within your business. Maybe you're at the very beginning, maybe you're in the middle of whatever you're currently doing. Simply look at what is the future holding for your business, and are you trying to expand, or are you trying to hire more people internationally, serving a new clientele globally? And with that, again, I don't have a specific answer for you. Like, some people come to me at the very beginning of their business journey because they want to make sure that they're set up correctly from the start, which is, I think, one of the greatest mindset that you can honestly have, to be ready when growth hits you so that you're set up in the most tax beneficial way, as opposed to, I guess, waiting when growth hits your business and then starting to plan. Because Some people really stay for a long time in a sole proprietorship or as a self-employed person, only then to realize later down the track that actually there would have been a way better corporate structure for them available to save much more in taxes. So my recommendation personally is look at it from the very beginning, that you set up in the most tax beneficial way, but I understand some people want to wait till the business is really going and they're growing with the business and they're hitting bigger figures until they want to invest to set up an international tax or corporate structure, international structure. Third consideration that I would be looking at is as well, how global is your current situation? Meaning, are you already a location independent entrepreneur? Are you already having a global lifestyle? Are you moving around a lot? Does your business serve an international clientele, or are you very much focused on your local market, and do you have a home base as well? If the last one is the case, then I would more be inclined into waiting and setting up proper structures wherever you're currently located. And I would possibly wait till you are ready to expand that business and also maybe take your life on a more global and international level before starting to think about an international tax strategy. But again, it very much depends on your individual circumstances. It makes a lot of sense for people who are already living that kind of global lifestyle to think about an international tax strategy from the very beginning, because you want to be set up correctly. You also want to make sure that your tax residency is all taken care of, and with that could come potentially a company setup as well. So as opposed to someone who has a home base is maybe not just yet in need of an international tax strategy, but if they're trying to expand their business, then that might definitely be needed to take into consideration for an international tax strategy. Now, the fourth consideration is, how fed up are you with taxes? I hear a lot of people who come to me and they're like, I'm paying way too many taxes, it's way too high, you know, so how can we lower it? And if you find yourself saying that a lot of times and choose seeing your tax bills being way too high, then I think it is time to think about an international tax strategy, definitely, because there might be an opportunity for your business to expand, to serve another country, to serve another clientele in another continent that could be linked to an international tax strategy, even if you necessarily won't be leaving your home country behind. You could still have an international tax strategy, also more so if your business is growing. So if you find yourself over and over saying, I'm paying way too many taxes, there must be something out there how I can lower my taxes, then I really think it's time to look into a tax strategy and starting from a local level and taking it up to an international tax strategy. Consideration number 5 is, what are your future plans? I know a lot of times it's hard to predict, but really think about, what are your future plans in terms of your lifestyle? Are you gonna stay at your home base? Are you gonna want to travel? Are you going to expand the business? Are you gonna want to serve a new clientele in a new country? Because oftentimes going overseas and actually serving a foreign clientele actually asks to have an overseas entity. So that could go together with an international tax strategy. So yeah, ask yourself those questions. What are my plans? What am I gonna want to achieve in the future? And also for my clients, it always helps a lot when they jump on a call with me, on a discovery call, and I can kind of figure out where they're at in the journey. I also make my clients fill out a questionnaire with about a set of 15 questions, and usually when they take the time to actually sit down and write it all out and give me the answers, that's when they realize, like, okay, maybe it would make sense. Maybe I'm ready, even though like I can't tell you, you know, you need to be making 7 figures or 6 figures before you come to me. Those considerations in your head and having gone through them and reflected upon them, I think are very helpful. So again, I don't have a magic number to tell you when you're ready for an international tax strategy. I have people who come to me that are in all sort of different paths of life. Some are at the very beginning of their entrepreneurial journey and they already have a vision of their business in place and how they're going to grow the business, and they know that they want to be set up correctly from the beginning, and that's why they come to me for an international tax strategy. Other people, they prefer waiting till they're making $50,000, $100,000 per year consistently before they're ready to like grow overseas and tap into foreign markets and deal with international taxes and the compliance issues around that as well. So again, it is fully up to you. And if you're hesitant and you don't know what to do, please reach out to me. As I said, we can discuss it during a discovery call if you're not certain what next steps you want to take. But if you find yourself always saying, oh, I'm paying way too many taxes, then it might be time to look into an international tax strategy, and we can always start out on a local level and see how you can save more taxes within your home, and then eventually that leading to an international tax strategy. So even though you haven't received a magic number from me, like a figure that you need to be making before thinking about an international strategy, I hope this has answered your questions and you have somewhat of a guidance of how to decide whether or not you should do an international tax strategy. Thank you so much for your time in this video and your attention. And if you've learned something, if this has helped you in any way, please give it a thumbs up, share it with someone else who might be thinking about an international tax strategy. And I'll see you on the next video. Thank you guys.